this is Jeff Wright with Foundation First Property Group, and today we're going to be looking at how to access your net income statement from the tenant portal. So once you log in, you should come up to this screen here, and if you scroll over to the right-hand side up at the top where it says Reports, click on that, and then on the left-hand side, down towards the bottom, you'll see over here, Income Statement. And you have two choices, consolidated or detailed. We're going to look at the consolidated one right now. The detailed is going to show every single rent payment, every single itemized expense, um, everything. But the consolidated is going to be what's best for right now. So if you have multiple properties, you can select all, or you can do each individual property, whatever you'd like. The date range you're going to want to do last year. The interval, I just do a year. I just want to see the final number for the year when I'm looking at this. And the cash accounting basis will work. And then we'll run the report. So down here, the total income, this should be what is reflected on your 1099. It should be the exact same number. So if you've already received the 1099, you have this, so you don't even need to worry about the income part. If you haven't received your 1099 yet and you want to get started on your taxes and preparing your Schedule E, this is going to be the number that's on your 1099, so feel free to use that. Now, getting down into the expenses, this is going to be what you're going to transfer over to your Schedule E in your expense section down on the bottom half of the page. The management fee, it just gets transferred right over. Utilities gets transferred right over. Now, keep in mind, we do not pay your mortgage, we don't pay your taxes, and we don't pay your insurance. So you may have those escrowed through your mortgage company, but either way, the mortgage company is going to send you a 1099 INT, an interest form. So you'll be using that to keep track of the mortgage interest that was paid. But just know that you'll have to get the taxes and insurance and the mortgage information yourself to enter that on the Schedule E. You may have more columns, you may have less columns than what I have here. It just depends on the property. I know in this property here, so under cleaning, repairs, and maintenance, I have $140. That was just basic rent ready, just probably a furnace, preventive maintenance, or something like that. So that's just something I'm going to write off as a repair. Going down here, the $800, I know that for this property, this was to add a parking pad in the back of the property to give the tenants an additional parking space. So this is something that I may have to write off as a capital expenditure. With the new tax law that came out and even tax changes in the recent years, I may have the ability to just write this all off in 1 year, just to save paperwork. And the laws have come out recently pretty favorable in rental property owners. So that's something that you may have to go into the detailed report and pull that to be able to look at the specific repairs that you have, and either you yourself or with the help of your bookkeeper or accountant determine which ones are repairs that can be written off right away this year, or which ones may be larger capital expenditures that have to get depreciated over a longer period of time, 5 years, 15 years, or 27 and a half years, depending on what type of property it is. But that's how you get into your income statement. So again, if you have any questions or any concerns about this, please feel free to give us a call. Thank you for watching.